What is up, guys, and welcome to another video. Today I wanted to go over and show you guys how I passed a funded account in just 1 month. I have been trading Forex since the start of this year, and it's been up and down, obviously, and literally one tiny thing I had to tweak to my strategy made me pass a full funded account in just 1 month. Let's show you that real quick. So right here, phase 1, phase 2, both success, right? So when we click on details, obviously I got this account a long time ago. This is my first funded, August 26th, right? And obviously I've took a ton of trades since then. That's not what we're focusing on. We're going to focus on this right here really quick. So right here, you can tell right before we ended up actually making that spike in passing, we were at 10-18 of this year, obviously, which is going to be in between these two trades. So since this loss, after that this is about where I made that tweak and just absolutely skyrocketed and ended up passing this phase in obviously just a week or so. And let's go quickly show you guys the second phase. Bang, obviously still took losses, but look how little these losses are compared to all the gains I ended up actually winning off of it. And I got funded on phase 2 November 6th of this year and actually passed that November 20th. So literally a month and 2 days I passed a full funded account after making just a little tweak to my trading strategy. So in the charts now, I'm going to show you guys just a quick example of what I'm talking about. So the little tweak was actually kind of two little tweaks. Number one being the stop loss. I made my stop loss a little bit too tight, and I would get wicked out and all that stuff, get out by literally 1 pip. And one thing I've realized is all the top funded traders, all of the top ones, their average risk to reward is 1 to 1.25 to 1 to 1.5. That is literally how small on average their risk to rewards are on their winning trades, right? Because you want your stop loss at an area that if it gets hit, you're for sure wrong on your bias, right? Like 100% you are wrong on your bias if it hits your stop loss. People get too greedy and they place their stop losses way too greedily, and they'll get stopped out, or then it'll end up going reversal from that stop loss to hit their take profit. So basically all I did was just make my my stop loss a little bit bigger and put my ego to the side. So I either look for obviously recent lows, or then I'll put that stop loss a little bit lower than that as well, just to let price fluctuate just a little bit extra compared to what I used to. And I found huge success in doing this. And obviously take profit should be your normal levels, either supply, demand, support, resistance, area of interest, highs and lows, right? Just simple stuff. But that's not what we're focusing on. You want your stop loss to let price action have some breathing room, and if that stop loss actually gets hit, you're for sure wrong on your bias. Okay? And then number 2, understanding where price wanted to go. For example, let's just say, let's use this price action, right? We're going up, making higher highs, higher lows. We're slowly moving up, having little pullbacks, continuing to move back up, right? Let's say this was the price action. What I would do is go against it. You can also see weekly, daily, and 4-hour are all bullish on these time frames. So since they're all in sync bullish, you want to take longs, right? Otherwise you're going degenerate and you better not be risking a lot. But I would try to, like, let's just say sell, like if we went down here, retest the area of interest, and then I'd try to sell when price is clearly trending to the upside. I'd try to sell in those markets. That was literally the number one factor of most of the trades I ended up taking L's on, because I just wanted to hop into a market. Looking back at it, I realized how stupid my analysis was and how stupidly greedy I was being with my stop losses, right? And then another thing I just simply added to my trading strategy is you got to understand there's trends instead of trends, right? So let's say for this example, 4-hour, okay, we're waiting for the retest, so we're here. Once we hit this bullish engulfing, right, from this red candlestick, we're gonna buy, stop loss down here, take profit to the area of interest level. Well, what you can also do is go to the 30-minute, right? And clearly on the 30-minute, now we're bearish on that 30-minute. Let's just zoom in and let's just say, by the time price is over here, right? Obviously it's going to be up here somewhere on the 30-minute. Let's say this turns into a support level, right? And we see multiple rejections after it comes back up and tests, and we see this turn into support, and we come back, test that support level. Well, then you can take another trade on the 30-minute from that support level, take profit that area of interest. Stop loss low is obviously within a little bit extra breathing room, and if your stop loss gets hit on this, then you're guaranteed wrong on your analysis, right? So that is another thing I added, and it literally made me so much more money, and it basically be taking like 2 trades in one, right? Obviously not all the time I'm taking 30 minutes off of my 4-hour swing trades. It's only if there's a trend inside of this 30-minute time frame, and just adding that made me so much, and I mean so much more money, and literally I was able to pass a full funded account in just 1 month. If you guys are wondering on how One of One is doing, with payouts and stuff, right now I'm doing a series, Road to Profitability. That series ends once I hit that withdraw button and get paid. So if you're really wondering if One of One really does pay out, you can follow along in the journey, because I am using One of One right now. That was my first funded for only $6K. I have multiple $100,000 accounts now, just with different brokers. But One of One's my main priority for the series, because that was the one I've passed so far, because the other $100,000 accounts are new accounts, like I just opened them. So that's literally it. Just identify, understand where the market wants to go on those higher time frames, understand that there's trends inside of trends, and you can take trades going in favor of your swing trades on the lower time frames. Give your price action some breathing room. Stop trying to get a huge risk to reward, because it's just not worth it. You're gonna figure out that you're gonna get stopped out way too much and a lot more often than what you should be getting stopped out. I hope you guys find this video informative. If you have any trouble, have any questions, leave that down in the comments below. If you have any content ideas for me, also leave that down below. Yeah, this is just a short little video just showing you guys tiny minor tweaks that I put into my trading strategy that made a huge difference. So hope you all have a great day. If you enjoy this content, smash that like button, smash that subscribe button. Love you all, and I will see you guys in the next video. Peace out.